In the energy quadrant, taking a look at the July crude oil futures contract, which was sub 73 today. WTI crude dropped below $73 a barrel for the first time since February 6th, completing the sixth consecutive session of lower prices. The high today was actually a gap lower from yesterday's settlement by 12 basis points. 74.13 was the high today. 74.22 was yesterday's settlement. That's 0.12% lower in terms of the high price today. That's the gap it represents. The low, 72.48. 2.34% lower, and we ended up settling on the day down about 1.2%. Over the last 6 sessions, crude oil has dropped 9.2%, with 5.86% of that drop coming in just the last 2 sessions. More weak economic data in the U.S. today, suggesting potential weaker oil demand in the future. U.S. factory orders were slightly stronger than expected, but they matched last month's numbers, which were revised lower. And the same thing with factory orders ex transportation. Also, JOLTS jobs openings came in lower than expected, with last month's figures being revised lower as well. All of this potentially points to weaker crude oil demand for the U.S. because a weaker economy means less demand for crude oil. Also, the dollar is up mildly in the aggregate, but it represents more of a pause than a strengthening. The weakness is against the majors, and that could be part of the reason crude oil rebounded from the lows today. Against the yen, the dollar is actually lower by 0.8%. Against the Swiss franc, the dollar was lower by 0.74%, and the dollar was also lower against the euro currency. When the dollar is weaker, typically you get a little bit of a bid to crude oil, and again, that may be why it bounced off the lows today.